Hey guys and girls, welcome along to this week's webinar. I've got a special guest here today, and that's Patrick here from our investor relations team. So thought I'd bring a few people on board moving forward with our webinars, just so you can get to see. I've had Rose, I've had Michelle from Blink, I've had Ridwan, had financial planners. Just thought I'd bring the rest of my team in and get to hear from others what is happening. So just as always, if I can just get a little comment section, IT testing, make sure you can hear us, you can see us, you can see everything on the screen, and we'll get into it. No one's writing in. Beautiful, awesome, good to hear. Cool, they're coming through a bit of delay. Cool. So lots of things to talk about today. I'm going to talk about how to start investing in the Australian housing market. That's the topic of discussion today. Patrick, I'll get him to give a bit of a rundown on who he is, what he does, and how he fits into the B.Invested business and what he does on a day-to-day basis. Apologies for my ridiculous haircut. It is getting longer. I can see it in the video. It's really bad. It's just more for it there.
It's all the angle.
Yes, it's the angle. Yeah. Just as always, now this is financial advice. We're not your financial advisor. If you need help, reach out to us to get some special, one-on-one sort of advice and guidance on that front. Before we really get into it, I'll give you tonight's agenda, which we'll slide over to now, and have a look at the on tonight's agenda is what we'll be talking about. One thing I wanted to touch on, and I think it's very interesting, I won't go too deep into it because we don't want to go into any conspiracy theories tonight, but interesting that everyone was fearful that we're going to have an interest rate rise, and everyone thought, by now surely we'll have interest rates going up by 0.25% or something like that. And funny enough, they haven't increased interest rates, and why not? It's because everyone would go broke if interest rates went up. Looking at, thanks John, I mulled this solid. Funny enough, interest rates aren't going up, and now we're starting to see, last year we had the sickness and all that sort of stuff, and now we've got a war, and they can't put it up because we've got lots of problems out there. So it's funny that the issues that we've had with inflation, the issues we've had around the economy, it all started off with the virus, and then it started going to supply chain issues, and it became a war with China. Now it's becoming a war with Russia. Now it's dealing with the corona impact around the world. It's just very interesting that you've got this one common problem that's lingering around, and it's constantly, surprise, surprise, affecting the financial markets. And it's very exciting to see what's playing out at hand, not for those that may be in a part of the war or whatever's going on, because I don't know, I'm not there. But Pat, tell me, what do you do?
Okay, what do I do? So, first of all, thanks for having me on.
That's right, Pat. Thanks for what you do.
And hello to all my happy clients out there who have joined us tonight. It's good to see some familiar names there. So basically, what I do, along with my colleagues, everyone else in the investor relations team, is basically we're kind of the first port of call when you guys call up the business. When you guys call up the business, excuse me.
He really does have a crackly voice, guys. It's not you. It's not the microphone for Patrick.
So when you guys call up the business, it's us that you speak with first. Basically, what my role is to identify whether or not you guys have a problem that we can fix. And sometimes that problem is wanting to build a portfolio, obviously, but it could be, making more income, or growing your existing portfolio, or refinancing because maybe you're stuck with your existing finance team. It could be a number of different things. But we are the first port of call, and if we can identify something that we can help with, we'll then pass you on to Nathan, where Nathan's kind of the crazy scientist behind all of this. It's kind of like Doc from Back to the Future. He's got all the plans up in his head.
Great hair. Yeah. And the crazy haircut.
Yeah, that's right. And so he will basically devise your strategy, devise your plan, devise working alongside with you, the investor, understanding what your goals are and working backwards from there to build a portfolio that would be relevant for your situation. So once you go through that process and the properties start to come, that's where myself would help you through the decision-making process of actually purchasing the property, saying yes to the property. Why are we saying yes? How does it fit into the portfolio? How does this particular property fit in terms of the sequencing of the different properties that we intend to buy? And that's a huge thing, I think, is sequencing the properties. We've spoken about this a lot. Buying the right property at the right time. Sometimes people come to us and they bought 1 or 2 properties and they're stuck. And that's usually because they bought the wrong property.
And it's not always the wrong property. Sometimes it's the right property, it's just the wrong time.
That's right, absolutely. So that's the big thing. And the other thing is, what are your intentions? Do you want to buy 10 properties? Do you want to just buy 1? It's all about what your end goal is, and we'll basically fill the gap with the necessary assets. And again, I kind of like to use the term assets rather than properties, because the property itself, as you say, it's just a vehicle. We're buying assets here. So perhaps if there was a better asset class, we'd be doing that.
Yeah.
So it's about the assets, not so much the property itself. But yeah, so that's essentially what we do. We're here to help you along the way, to make the journey somewhat a little bit more smooth, although it's always a bit of a bumpy ride, I think. But that's what I'm here to help with.
If I could say what I think Pat does, and this, for those of you that don't know, so we've got Gemma, Pat, Wayne, Matt, and Jeremy. I think you've met most of the team beforehand on previous webinars as well with Pat, but not one-on-one. It's just been jumping in a webinar and out of a webinar. I guess summing up, when you're building a portfolio, you're trying to build wealth, there's so many moving parts. It's not just about one property, or it's just not about one thing. It's the whole journey, and there's no one out there. Like, you go to your broker, they'll give you their advice. You go to your accountant, they'll give you their advice. There's not many places that you can go and get guidance that would be throughout the whole journey. And I think that where Pat and the team come in is that they're your sort of concierge, whether you're just starting off, whether you're coming to us and saying, look, I'm stuck at 5, I can't do anything else, my loans are screwed up, I've got money in a super fund. A lot of people don't realise what they've got as an opportunity. Out of a percentage of people that come to us, how many percentage, right, out of 100 people, how many people do you reckon could do something but don't think they could do something? How many people do you reckon help in some way, whether it's pushing up the rent, whether it's, fixing up their account?
I reckon everybody. Honestly, I think that probably about 90% of the people that come to us we're able to help in some way, shape or form. That's right. Yeah. I mean, the reality is we can't help everybody. There are certain limitations with, it could be finance, it could be a wife who's on maternity leave, so they have to wait for 6 months or whatever it might be. But the majority of people that are here to increase, improve, build the portfolio, absolutely, we can.
But you've got people that you've been speaking with the last 1-2 years where I know Jeremy's got people he's been speaking with 5 years, and then you might talk to them one day and be like, hey, we're ready to do something. And it's that guidance along the way. So,
yeah. I think we might touch on this a bit later as well, but a big thing for me as well is when you come to somebody, in this case Nathan and the whole company, when you come to somebody for assistance in anything in life, and it could be personal training or it could be anything really, but like
that's what I need.
But you're coming to, lack of a better term, an expert in the field, and sometimes people don't do as they're told. And what I mean by that is, if you're looking to lose the gut, and you employ a personal trainer, and he says, Nathan, go and do 100 sit-ups every night, and he's like, nah, you know what? I'm just going to continue eating charcoal chicken and pizzas on Friday night, and it'll probably get better. Yeah, it'll probably get better. Sometimes that happens with suggesting a property in a place, for example, that you may not have thought about looking in before. Yes, it might be uncharted territory for you as the investor, but a setup like ours, we're here to do the due diligence in those areas to make sure that it's a good purchase for your portfolio. So, it's also a lot about trusting the advice when you're in there.
And like I've seen so many people, right, over the last 12, 13, I think it's like this is the 13th year or 14th year that we've been in business, and I've seen so many people that we've given the knowledge to, they've got everything they need to do, but they don't take action too, right? Or they take action, but then they add their own twist of emotion and stuff. So there's some of the things that we'll talk about tonight. I've got lots of questions about, the things that you've learned in the last few years working with investors, and the good things that you've seen, the bad things that you've seen, the things where people get stuck and all that sort of stuff.
Yep.
I've got a couple of random questions. What would you say your top 1 or 2 clients would have done in 2021, just to give a bit of an understanding and background of what you work with your investors?
Okay, so there's been a few of note. Can I name names? No.
You can't name names, but you can name like a scenario, like 21 properties in 4 months sort of thing.
Yeah, okay, that'll do.
I'm not putting ideas in your head.
Well, look, let's start there. So, a relatively young investor came to us, I think, last August, and she jumped on and really great to work with, and I think she's about to settle on her. Honestly, I've lost count.
I think it's 21, and maybe one's with or something like that.
Yeah, 20. Yeah, let's say 21 properties.
I think she's got about 4 or 5 of them in the pipeline still. So
yeah. So from August last year to now, let's say all in all about 8 months, the whole journey has been 20 odd properties. Simply by following the process, there's been an extraordinary outcome. Everyone's got a different starting point as well. What I love, I really love working with people who might come to us with 30 grand or 40 grand, and it's almost their life savings up until that point, and they don't believe that they can do anything.
Well, it's interesting you say that. I'm not going to mention the person's name, but the person just wrote here, and I've been working with him now, and I'm going to make sure he gets really cool position very quickly. He just wrote, I just got my first property at 60, didn't think it was possible. Great team, helped me see the big vision.
Yep.
Which is really cool.
Yep.
So, everyone's in a different position. You could be 60, you could be 18, you could be 19. You've got some clients that have been like 19 and got like 3 properties in a year.
Actually, there's another one that comes to mind as well. He came to us, again, late 20s, so relatively young guy. His salary was something about 80 grand or something like that. And his starting point was also about 80 grand. And I think he's just said, actually he's in the middle of a refi, pulling equity and whatnot, but he's up to about 5 or 6 properties.
I don't know who that is. There's so many of them in that spectrum.
That's fine. But that's one of those things that, he started with, let's say it was $80,000. It was around that figure. Now, most people would think, okay, with 80 grand, I could probably buy one. Yeah, I could probably buy one. Now, he bought 2 to begin with, and he'd probably stone cold broke. After that, he probably had about $1,000 to his name. But we did a refi. He followed the process. He got another 2, and now he's done another refi, and he's about to pull, another 70, 80K, and he'll probably go for another 2 properties. And his question to me was, because he bought singular properties up until now, his question to me is, when do I start getting into the duplexes and the triplexes and the unit blocks and all that kind of stuff? So he's really hungry to continue. the unfortunate reality is that there are some people that might come to us with, bucket loads of capital to begin with, and maybe a preconceived idea of what the property should look like, and we present properties that will help them in their position, knowing what their goals are, but they can't bring themselves to say yes because of whatever reason. And for me, that comes down to fear. That comes down to judgment.
Yeah, knowledge.
People sometimes feel like we're kind of in a generation, I suppose, of being brought up watching MTV Cribs and stuff like that. So if you buy a investment property which is just bricks and standard kitchen, standard bathroom, there's a maybe ingrained idea that you may be judged for buying a crappy looking property, but it's
we have a 4-bedroom house with a 2-car garage with 3 bathrooms, 2 living areas on 250 square block in the back of Kellyville or something. And paid $1.5 million for it and stuck in debt for the next 100%. And I've made a little note here, like there's a little note that I made, a couple of notes, a couple of things to ask you, but this is something I talked about a lot many years ago, but it's not something I've spoken about a lot recently, but just getting back to the basics of it. In Australia, we've got 25 million people in the country, and less than 0.001%, less than 1% of 1% have 6 or more properties in their portfolio. So less than 20,000 people, I think it's about 18,000 people, have 6 or more properties in their portfolio. So if you break that down, if people only have 6 properties in their portfolio, we're really blessed by the fact that all the people we speak to, or people we deal with, they may have none, they might have 2, they might have 3. People don't come to us with 10 properties and want help get 20. They normally come to us with 6 or 5 or 4 and get stuck, or they might just start from nothing. Or they might be a first home buyer, and everybody's in a different position. We've got a few investors that are now second generation. We've got the parents that have got like a dozen properties, and then you've got the kids coming through. These kids I met when they were like 12 or 13, and now they're 20 with a beard and shit. And it's like, wow, that's a bit weird. They were just for like a decade sort of thing, and now the kids are buying 3 or 4 properties. And I think the difference is just the mindset, the process, the commitment that they've got, and the understanding. Like when I say the understanding, you can have an understanding of how to do anything in life, but if you don't know how to execute that, then it's there's no point having that knowledge. And there's so much knowledge out there in the world, but so many people adapting that knowledge. And for us to be able to deal with so many investors, like I see that we've got like tens of thousands on each of our social media platforms, people that just watch our videos, might see us somewhere, get our newsletters, whatever. And then randomly see people, whether it be at Servo or whatever, and they're like, Nathan, I've been watching you for years and shit like that. There's people we don't actually do business with every day of the week that are out there learning from our knowledge, but is applying.
No one recognises me there. If somebody wants to see my face,
they will after the night. So. But yeah, with it, it's a strategy that you have behind it that really makes it crucial. That yes, it's a property. Everything you can get any property, but you should never be looking at your first or second property. If you're buying a property today, your first or second one will be locked into the bag. But what you're missing out on is the property under 3 and 4. That's what you've always got to think about. And I think that's what Pat and his colleagues in the investor relation team help manage investors getting to whatever their goal is. Everybody's goal is different. I know Gemma, just look at some of the photos of the stuff. Looking at Gemma's one of her clients, she's had another client that's about 65, I think, at the moment, and they've got a very small window to buy a couple of property. Their journey will be very different to your lady that's got 20 properties in 4 months, because risk, cash flow, younger, you probably look at more growth and equity, and the older, you're looking at more of a cash flow role of the position. So everybody's starting point is different, everybody's end goal is different, and that's where Patrick, and I call it Patrick now, it's rare that I call it Patrick. It's all my mum calls me Patrick. Okay, yeah. Okay, Patrick. I really wanted to call you that. You're like, why are you calling me that? Yeah. I was like, yeah, Pat. Pat's role is here to, help guide you and work out and identify what you need. Pat's no financial planner. We don't, attempt to be financial advisors. However, when you do something really well, you become an expert of it. I don't think there's any, university degree that you go to in order to become a race car driver in Formula One. Right? I don't believe there's any university degree to do that. It's important to, have that guidance and repetition, and that's where, Pat and the team come in to help guide our investors to make sure they're getting the right thing for the next step of the journey. So, yeah.
There's also quite a big element of accountability. With anyone that comes to us, there's a level of trust as well, right? So there's a level of trust for us to have a duty of care to provide the best investment that we can for their certain position at any time. And I find that sometimes, again, fear creeps in process, or the emotional side creeps into the decision-making process. And it's kind of my role and my colleagues' role to sometimes snap them out of that. Snap them out of like I always say, leave the emotion for your primary place. Make the emotion, or make the decision now, buying these investments, logical. Don't make them emotional. You can make your emotional decisions when you can picture your kids running around the backyard, or the dog jumping into the pool, or whatever it might be.
There was a dog in the pool. You'd have a dog there throughout your pool.
But, sometimes making good memories with that, But with the investments, it's all about what they are actually going to do for you. So don't forget that whether you use a buyer's agency or not, with any investment, it should be about what role is it performing for your portfolio. It's you always got to keep that in mind.
I'm going to flick some of these slides over. Hopefully everyone can hear us a little bit better now, because I had someone come in just a moment ago and adjust the settings on the microphone. So hopefully it's less crackly now and people can hear us louder. I'm going to run through some of the most frequently asked questions, Pat, that you would find on a day-to-day basis. Brock just said, spot on, everyone's cool, awesome. So people ask this common question: where do you find the investment properties? Pat doesn't actually find them.
I don't find them.
Pat doesn't find them. I find them. I might answer this one.
Yeah.
So I've got about 27,000 real estate agents that I contact, so I reverse market to them. I send them emails, try and find out what stock they've got, what stuff they've come in the market. I work with agents. Probably about 50% of the properties that I buy would be on market, maybe 50% would be off market. I'll get into it on the next slide as to how that all works. But after doing 15,000 plus transactions in the country, we've got really good relationships with real estate agents, which has given us the opportunity to be able to be the first people at the table to make deals happen. I was talking to someone yesterday because I need to buy an office, actually ran an office in Queensland for something. And this building that I bought the office in, or buying an office in, that building was where we actually set up one of our first offices. And the guy was like, tell me, do you know the building and all this sort of stuff? And I was like, I got the thing so cheap. I've never spoken to this agent before. It's commercial property. And it's worth probably like $950. Picked it up to $580 for the property. And with it, it's just about to be finalised right now. But I was talking to the guy, and I was like, we actually bought the units to sit on top of for our investors many years ago. And he's like, okay, this certain group. And I was like, it's actually the bank came out from the Netherlands. So it was Morgan Stanley. As much as I say I fucking hate banks all the time, the bank actually came out. They sent their representatives to our office, right, to our office. And we negotiated this. It was a bank repo deal. And there was 80 properties left over. They were selling for like 600 grand. And we ended up picking up for like 300 to 320 per unit. They're like 2-bedroom units. And now they're worth about probably 600 grand again. This was about 8 years ago. And we just bought them so cheap. And I told the guy, he's like, you're that guy that bought these things, right? But yeah, the bank came over from the Netherlands. So it's random. The deals have been everywhere throughout the country. We're buying from coast to coast, whether it be in Sydney, Queensland, in top of Cairns, top of Cape York, all the way over in South Headland in Western Australia, Perth, coast to coast, corner to corner of the country. There's not one size that fits all. So the properties that we get, and I think that's probably one of the biggest hurdles that you'd come across. Not hurdles, I don't know. I'll ask you now. I've never asked you this. How many people feel uncomfortable buying, like, not in their backyard? What would you think?
A lot of people do, but again, the people who I feel are most successful are those who are open to something new. They're open to suggestions where they haven't looked before, because if they have looked, and we are presenting in all the common areas where we're just up against hundreds of other investors. So there needs to, I suppose, be somewhat of an edge in terms of where we're buying, so we can continue building the portfolio. But a lot of people might come to me and say, oh, I just don't know anything about that area, or why is that good, or why does Nath keep sending me properties in mining towns or something? I only want to buy in Brisbane.
I'm not a fan of mining towns. I just buy them occasionally, but if it's what you need, it's what you need. It's a vehicle to get you to that. I'm not going to bore everyone with the how do you get Perth scenario today, but you need to. Maybe there's some new viewers here; they may not have heard it, but I always ask people, how would someone get to Perth? And 99% of the time, people say you'd fly there, but people living in Perth wouldn't go anywhere because they just walk to Perth because they live there. You might catch an Uber, you might, wherever. If you're in Sydney, where we're in Sydney, you could drive, you could walk, you could roller skate, you could ride a bloody horse, you could helicopter, whatever. But a plane isn't going to land in our office in Bella Vista, right? A plane will land in Mascot Airport. We're going to need to catch a train, a bus, an Uber, a different vehicle, a different step of the journey to get there. If we, let's say, what's the time? It's a Wednesday now, and if we have, I don't know, let's say we've got someone's wedding to attend to tomorrow on Thursday at 4 o'clock in the afternoon, and our flight's at, I don't know, 10 o'clock tomorrow morning. I don't even know if you can get to Perth now, but anyway, if we are not at the airport at 9:50, 9:30 to be a half hour before the check-in, well, then we're going to miss the plane, and then we're going to miss the wedding. So what vehicle do we need to do? Do we need to hop into to make sure we're there? We can try and wait for the bus, but if the bus is late, then we're screwed. We might need to hop in the smelly Ford Falcon where the diff sounds like it's going to clunk in the back of the taxi, right? And catch the taxi there. So it's a different vehicle at a different stage. If you live in New Zealand, there isn't any driving. You're short of options. You've got to fly to Perth. You can't walk to Perth. You can't, do certain things. So your destination as an investor, you should be reverse engineering and going, okay, where am I at? Where am I today? What steps do I need? And then you can fill in the gaps with the properties, which is very, very important to make sure you're in the right vehicle for the right time in your journey. It's not just buying a property, because that's what everyone's looking at. A property is a destination, but it's the journey that gets you there. So, the vehicles that get you there.
And what about just to elaborate on that? A couple of other questions that people sometimes have is like, how do you identify that this is a good deal rather than the deal that's down the street? Sometimes the deal down the street might actually look better, but it's might be 5,000 or 10,000.
You actually had it,
right?
Someone the other day, this one here, that said we're spot on, and you know who we're talking about. And I'm going to be in contact
very soon.
Very soon. So this person asked, he will know. So I'm identifying as a bloke here in the audience. He will know that the other day asked Pat, what I was going to say Patrick. I don't know why. But he asked Pat, here's a unit. We bought a place for like 210.15.
Yeah.
It was 215. And he said, why is this property 215 good? There's another one that's older in a surrounding suburb 5 k's away or whatever for 180, which still wasn't too bad, but it's not comparing apples to apples. And there was something that was a bit more expensive, but it was like, there's a different one. It was like a 1-bedroom NRAS property. And not all properties are the same. So you need to compare what are you comparing it to. And when I look at properties, when I identify, when I'm dealing with these agents, try and locate the deals and negotiate the deals, I'm trying to identify from a bank. Like I put myself in the bank, and there's so many hats you need to put on just in a business, right? In fact, you see this sometimes, but it's really deep, right? Like I was just chatting to the guys out there before we started the webinar that, like I've got renderers that I've got to look after, right? They're in the Blue Mountains. I've got painters that have just driven to Air, which is in Townsville, to paint a pub, right? There's just random shit going on, and it's like, there's so many moving parts in a journey, and you need to make sure. I forget where I was going with this. What did I say before that?
So just a comparable, like if someone locates a property,
yes, the hat to wear. So in a business, there's so many hats that we have to wear. Like 1 minute will be, putting corporate governance on my hat, right? 1 minute it's like, let's go hustle some deals. Next minute it's like talking to a tradie. Next minute it's helping someone with the strategy. As an investor, you need to be putting on different hats. I look at a deal when I'm negotiating it. How does it look from a valuer? Like if I was the bank coming in, I'm always thinking when I'm buying a property too, I'm not looking at what I want. I'm not looking at what the client wants. I'm looking at what the client needs. I'm looking at what I need. I'm thinking about, okay, the bank requires me to have X amount of cash flow to give me the next loan. The bank requires me to have X amount of money as a deposit. So the properties need to, like if you don't have the cash flow coming through from the property, you're going to have to top that up from working harder and all that sort of stuff. So you want to get the properties to work for you, not you have to work for yourself, which, when you're comparing these properties, I'm trying to look at it from the valuer's perspective and going, okay, if I'm the valuer looking at this, what would I compare it to? There's 3 other sales over here that have sold, and there's nothing under 300 grand, and we're picking it up to 215. Well, then that's good value. There's a very high chance, a high probability that when the valuer comes through and one sells at 280, well, then the valuation will land at that point. Yeah.
I think we were having sushi or something and discussing this property.
You're eating sushi. Oh. I was eating fish cocktails on bread rolls, really bad.
And it was actually quite interesting for me to see Nath kind of go into the zone of breaking down each. And just to give everyone a bit of an insight here, a property was presented. The person who was presented to did a little bit of a look around and found some other comparable properties and sent them back to me and said, hey, what about these ones? This one's a little bit cheaper. This one's a bit more expensive, but it looks nicer, etc., etc. So I basically showed it to Nate. It was very interesting to see immediately almost. He said, no, that's not going to work for him because of this reason. And it was quite obvious, but maybe not obvious to someone who's not looking for those certain details. Even down to the specifics of the postcode. Like, well, we know that the banks aren't valuing that postcode as strong as the next one. So that's a huge thing,
I remember when we picked up for about 7 years on the Gold Coast, probably 50 properties a month, right? In the Gold Coast and Brisbane. But people literally would turn around to my office when they see like either my law firm or the property management company come in, they're like, get fucked, these guys are stealing our management figure, right? Like, they hated us, right? They're literally like owners in complexes, like the managers in the complex be like, you're not allowed in the complex. It's like, well, we own all the properties, so you get out, right? It's like funny. But we went in gorilla, like we were literally doing the largest buyer of properties in the Gold Coast and Brisbane markets for the last 7-8 years. And I remember like nowadays we're picking up maybe 3 or 4 because the market's very hot and we don't want to be buying into, we're contrarian investors. We don't want to be, it's like saying, okay, I'm not going to have a drink until I get to the Easter show so I can buy a can of Coke for $10. It's like you have a drink on the way home, right? Before you go. But the thing is that looking at the properties that we used to purchase like very heavily on the Gold Coast, we're buying like 1-bedroom units for 150 grand, 160 grand. People will say, well, there's one down the road for 160 grand or 180 and it's better. And I'd look at it and I instantly know, right? Because I knew every property street by street, and that's what I need to do when I've got the areas to buy. And people would say, here's this property is better. I'd look at it and I'd be like, it's not comparable, right? Sure, it says 1 bedroom in the ad, but what they haven't looked at, you can instantly tell these little telltale signs. So you'd look in the rooms and it'd have the beds there, and you'd see on the beds that there'd be rolled up towels, right? I don't know about you, Pat. When you go home, you ain't fucking seeing no rolled up towel on your bed, right? Your business ain't going to do that. What it's going to be is that's a motel, right? So a motel is not comparable. Like a motel room is a very, very bad investment. Right? When I talk about buying motels, it's a different thing. But when you're buying hotel rooms and shit like that, very incomparable. I wouldn't even value it at 180 grand. I'd call it like 60 grand if I had to. But these things were uncomparable properties, but to the normal eye, you'd be like, oh, that thing looks nice, a bigger, new or whatever, but missing the juice out of it. And those things now, from 160, you're probably worth like 350, 400. Yeah. So, yeah. This is one of your questions. With the slides, I think some of these questions are, the questions that you get asked, but I've got the answers to, like, why would someone sell at below market value? Is one of your big things. Many different reasons. Bad agent, some agents promise the world, they don't get the result. There's lots of different reasons to owners. Sometimes it's an agent. But for me, I actually break agents down to, there's probably 4 or 5 different types of agents, but I'd break them into 2 components, maybe 3. So let's say that 30% of them are just want to get a deal done. They don't work, they work for the buyer or whatever, they just want to get a deal done. The other 30% would be, they're just there to get every single cent out of the buyer, which is what people employ a real estate agent to do. And the other, say, 30% would be agents that are just, they're just there to put a deal together, just a massage deal. I would never sell a property with the one that's a lazy agent, but I'd never buy a property off the one that gets the highest price. So I'd buy with one, I'd sell with another. Some of these agents, I've spent a lot of time understanding their sort of mindset over the years, doing so many transactions, that it's down to like NLP, like neuro-linguistic programming, to see, okay, what do they want? How are they going to behave? The real estate agent doesn't care about, like, if they get an extra 10 grand for a property, they might get an extra $200 from the com. But if they have to go out to the property every weekend, show it to uncle, auntie, imagine being a real estate agent. I'm sure there's probably some in here watching or listening later. But imagine being a real estate agent, and then the person comes in and they tell you all these stories like, oh, I've told my uncle, I'll give you an offer at 50 grand for the place worth 200. They're dealing with all this shit every day. So if they know that they've got, a person's going to do a deal today, they'll prefer to take that buyer because the terms of it. So they're looking for the path of least resistance. So when I'm dealing with an agent, I want to identify what sort of agent they are, and then work out how can I make the deal work for me. I want to make the agent work for me, not for the vendor. So bad agents, desperate sellers. Like I just sold my Ford truck. I've got a new Chevy truck coming, but I sold my Ford. It was a Ford Ranger. Bought it for 74 grand, sold it for 73 grand. Pretty funny. Lost $1,000. When it went, it had the engine light flashing because it needed a service. It had bald tires and all that. 60, 70,000 k's on the clock. And I was just like, okay, that's cool. I'm happy to see it gone. It's easy. I was going to, message you about it. It's gone. It comes. I went onto Facebook the other day, or car sales or something. I just typed in, I was like, I picture these things have fucking gone up. And now they're selling for 100 grand for a second-hand one. And I was like, wow, I lost maybe 10 grand on it. I reckon maybe I could push another 10 out of it a month or 2 later. But the reality of it is that I was happy just to see it gone because I didn't care. I don't care about it. Like, it was not worth my energy. I don't want to spend it on now. Just like I got my money back and I've got a new car coming. So as a seller, everybody's at a different point. If I said to everybody watching today, how much is a Ford Ranger worth? People might say, oh, it's worth 50 grand, it's worth 70 grand, it's worth 60 grand. That is a very vast different amount of pricing between 40 grand, 50 grand, 60 grand. People that offer 40 grand, they're insulting. Would you sell yours for 40 grand, right? People that are offering 70 grand, they're close to the money. Someone offering 80 grand, they've got no idea, right? That's why I'll take 80 grand for it. But as an agent, they're listing the properties through tech. They're listing it on to realestate.com and all that. People will inquire. So there's a thing in real estate, which is you list and last. If you're a real estate agent and you get listings, you put the listing up, and then people will naturally call to buy the property. So out of these agents, you know, you're dealing with their emotions. They might be like, I just sold the last one. So let's say we're talking about, this looks like a townhouse here that we've bought for someone beforehand. I think this looks like a block at 28 Ancona Street in Carrara. It might be it. I'm just thinking about it. If someone's pulled that stock photo from somewhere, that's a property. I think it's 28 Ancona Street. That's my memory, right? That's my photographic memory that I remember things when I see it. But if we look at a property, let's just say that the agent sold this for, I think they're worth about 500 grand now. But if they sold this property previously for say 300 6 months ago, another agent, let's say LJ Hooker, sold it for 300. Another one came up and sold it for 380 in the same complex with, I don't know, Century 21. Then I would imagine that the market moving and there's no stock under 380, that it would have to be worth around 380. But what a real estate agent would look at, if it's a crap agent, would be like, well, the last one I sold was only 300. It might be worth 320, so let's chuck it up to 320. That is where the opportunity comes in and go, that agent has screwed up something. That can happen from an out-of-area agent, someone that doesn't have the experience in the area or market knowledge. So it's finding those glitches. We've got tens of thousands of properties getting uploaded on realestate.com every week. You know, those properties getting listed have all different stories behind them and all different people's you know, views and thoughts on it. So when I'm buying them, I'm trying to work out who I'm dealing with. People ask you, why are they selling the property for? I'm sure that you get asked that all the time. Why is this person selling a property? I couldn't give a shit why the person's selling the property. It doesn't bother me why someone's selling a property, because if I asked, I'd probably get lied to anyway. Oh, they're selling it. Someone selling a property ain't going to go, oh, I've just gone broke, I'm getting divorced. People just be like, oh, I need to sell it, and they'll just, you know, their excitement might be a bit better than others. So yeah, with it, what other little notes did I have here?
If I can just jump in as well, what's your thoughts on? Sometimes I get asked this. Let's just take a $200,000 purchase price, for example. Let's say the listing price is
yeah, I would say
200,000, and no, let's say the listing price is 205,000, and we've got it at 210,000.
Yeah,
and then someone says, "Well, Nathan, that's not below market value.
It's over the price.
That's over market value.
Yeah.
I thought this was part of the deal. We're buying under market, aren't we?" Yeah. Explain that one.
So what you need to do is, when you're valuing a property, you need to look at recent sales and other properties currently on the market. So if you're looking at everything for sale, let's say, for instance, this property was listed for, let's assume this is at 28 Ancona Street, and I'm assuming people would probably be watching going, oh, is Nathan's memory right? Is this the right property? I encourage people to look at it, because I'm pretty sure, I haven't bought in there for maybe like 3 years or so. I'm pretty sure that's 28 Ancona Street. Let's assume that this property is selling for 500. And if this was listed for $329,000 and I went in and bought it for 380,000, people would be like, oh, no, it's stupid, you paid 50 grand over price. But if it's 100 grand below recent sales and other properties that are on the market, well, then where is the value? So there's a couple of areas there to look at. It's not the asking price. The asking price has zero bearings nowadays. What you will find, if you've been trying to buy a property anytime in the last 2 or 3 years, you will see that everything, as soon as you call the agent, you can't even offer them, right? In Brisbane, Gold Coast, the reason why I'm not that excited in that market today is because when they list a property for sale, it sells for $20,000, $30,000, $50,000 over the asking price, right? 50 grand over the asking price, very weird, right? I actually noticed that one of the people that was online before, Jerry, he knows who he is. There's a property that he bought, amazing deal, right? It was like, amazing deal. It was 800 grand and it's worth probably $2 million, right? I think we paid 850. It was asking 800, like literally 799 grand, bought it for 850 grand. Or it may have been 750 and we paid 800. I can't remember exactly. But the thing is I remember that was 50 grand over, but there was like 20 buyers on that, right? And that thing there, you go sell that property today, it's $2 million. And that's knowing what the market is, knowing where the market's at. These agents are just throwing properties up on the internet and hoping for the best. When they put it up, inquiries come through, they can work with it, and they can,
Do you ever consider like a recent bank valuation? Because sometimes what I've observed as well is that all the recent sales might be within a certain $50,000 range. Let's say between 200 and 250,000. But what we've found through Zinger, is that the valuations are actually coming back closer to 300,000.
And these are bank valuations.
Bank valuations. But sometimes there's no sales to actually be, absolutely congruent with that in terms of just going through realestate.com and comparing them.
Yeah.
So do you ever use the Zinger valuations to justify like something being below market value?
Well, Jono just wrote a message saying, ha ha ha, it looks like what a memory. This sold at 352 grand in May 2017. We've got a lot of properties in there. Those things there, they'd be like 500 grand. I was buying in here for about 260K. I remember people going, oh, Birchie, I bought this property and it hasn't revalued straight away, right? Like I bought it for, 200. The bank's come in at revalued at 220. I thought it was worth 280. But then 3 months' time or 6 months' time, they revalued again. They're like, I just pulled out. So one of Wayne, which is Pat's colleague over in Perth, he actually works at a bank, right? And he bought one, and I know that you've got one in your presentation here later on, which is in Caboolture, right? And you had a client that bought it for 210 or something, it revalued for like 275. His bank only valued it at like 230 or something, and he's like, I only pull out 20 grand. It's only been a month. I said, no, take it to this bank because they've valued it because of what the value is. This isn't what we say it's worth. This is what anything is. This is what the banks are valuing it at. And like he bought it 2 months ago. Just said, look, his bank said no, but take another bank. They're going to value it. So these are where the banks value it at. So they use their data and their research. So you need to look at things from a bank's perspective. Just on why we get below market value, just a couple of little notes. Agents prefer to deal with us. I believe I've done a lot of extensive training and research into how agents work. And I actually did back in the day like real estate agent sales training because I wanted to know what they're looking at. Right? Like it's like going in the dirty ghetto and trying to deal with what they're dealing with. But a real estate agent just wants to get a result, right? Like if they list a property for sale on Wednesday, let's say today is Wednesday, it goes up on the internet, 50 people contact them, they all might be offering, asking price, over the asking price. But if I come in and say, listen, I don't care about seeing it, we'll send a pest and building inspector out there, we've put all these clauses in to protect ourselves, give me how we actually close them. Like a real estate agent should normally be closing you. And the reason why I don't get too excited in these markets now, which is sort of a hot market, Gold Coast, Brisbane, half of Sydney, all that, is because those markets are so hot, the agents feel like they can control, right? There's one of the agents, you know him, he's really annoying, right? He calls up and whinges all the time. He's always trying to be proactive, this guy. He had a property and had a termite nest in the fucking roof, right? Like a big termite nest in the roof. And normally I'd just walk away from it. This wasn't a property we were buying. He told me about it and I was like, I'll take 40 grand off, I'll put someone on it. And he goes, bro, I'm not going to sell it to you. He's not like, bro, like, hey, he's one of my Lebo mates. He's bro, like, he's like one of my Aussie mates. He's like, this isn't going to, work. He goes, I've already got 3 other buyers at more than the asking price. He goes, they don't care about the termite nest. And I'm like, that's not a market that I want to risk in, that I want to play in, that I want to explore. I'll pick the eyes out of the market because I know like very specifically what's there and where the value is at. But looking at when a property goes to the market, the real estate agent just wants a result. They've got a family to go home to. They've got certain things they want to do. If you can make it the path of least resistance and close the agent. When I close the agents, what I do is like, let's assume that, let's say that I'm talking to Joe Smith over here and go to Joe Smith and say, hey, I want to buy this property. Can I buy it? Even coming down to when I call a real estate agent. This is a new real estate agent. I call them I'll be like, I'll just say it's Pat. I'll be like, hey Pat, I'm just calling, if I have to leave voicemail, I'm just calling about a property you've got for sale. I want to buy the property and sign a contract. Can you tell me what I need to do for next steps? If I say, hey, I'm calling about the property on 123 Smith Street, the agent will be like, oh, I've got a fucking 100 people calling me about this property. I don't care. But when I say, hey, please help me out, no ego involved, no nothing. I just want to buy the property. What do I need to do? That agent's like, shit, what property are you going to buy? He calls me up, and then, the conversation starts. Okay, oh, look, I've actually had lots of inquiry about that. Oh, that's okay. I want to do a deal today. Tell me, do you have a contract on it? Can you email it to me? I'm texting you my email address right now. Also, when you send me that email, can you please attach your trust account details so I can put the deposit? What deposit would you prefer that I put in there, right? So I'm closing the agent. There's never been like, oh, tell me, would they take 200? Would they take 210? Would they take 220? It's like, I'm closing the agent. Then it's like, okay, just confirming, just so we can not waste each other's time, what price can we pick it up for? Like previous sales of 1, 2, 3, I'll find all the other sales around that property that are very, very cheap and say this one's sold, this one's sold. We need to make sure it stacks up from a valuation perspective. We don't want to waste each other's time. What price can we get it? So we can show that we've got all the evidence, but we're not making it about me versus the agent. Like I've taken all the parameters away, and it's just a very easy thing. And the next minute, the agent's sitting there going, shit, maybe I sold that thing a bit too cheap. And that's how we get a lot of the deals like that. So yeah, I still actively spend probably 3 or 4 hours every day, 7 days a week, just researching, trawling, overlaying data, looking at how many properties have got under contract, the percentage of what stocks to flow in the markets there, and I've got very strong processes and systems and procedures around being able to negotiate with these agents. So I might negotiate, I've always got about 400 or 500 offers out there with agents. I might get 3 or 4 out of 100. So it's a lot of research that goes into it to get one because, it's just the market. So,
good question here. How much stock do you take from CoreLogic estimated values?
So with that, for those of you that don't know CoreLogic, it's RP data. Statistics can work in your favor or against you. It's very important to look at that and go, cool, that's one part of the equation, but that can work to your favor or against you. So you need to work out where does that fit in. So let's assume if you were to have, 10 houses in a street, 3 of them just sold, 2 of them are brick, 1 is fibro, those things can affect. I remember back in 2009, for those of you that know the entrance on the Central Coast of New South Wales, there's this big brand new block of units, brand new, it's Bank Repo. I picked up about 20 units in there. It's got about 110 in the block. And I picked these things up, and they're 140 grand, brand new for a 1-bedder. 2-bedder was like 212 for them. And I think the 3-bedder was like 230. They were selling for like 700, 600s beforehand, and they crashed, and we picked them up cheap. And then now they're selling for like 700 grand again, 800 grand. And when I bought them, it was really interesting because I remember looking at the data. This was like 12 years ago, 13 years ago. The data on that. So those of you that are familiar with the entrance on the Central Coast, 2261 postcode, the properties were. The entrance is a big part of the Central Coast, and then on the north entrance, it's the north entrance, which is a very small town. It's a town of about 1.2 kilometres in diameter, and it showed in that year 2 years prior, there was only like maybe 10 units for sale that had transacted, but then there was 100 units, right? The 80 that sold previously showed that the market doubled, the population doubled. It showed that the prices doubled. And it showed everything gone crazy for those 2 years. Then when Birchie comes through and he takes all these things from the bank and goes, give me all these cheap properties, right? The market crashed, and it showed that it had like a 50% fall, right? And that's just because the data in that area was so small, it could have swung it. But if you looked at just the data from that, you would have seen that the market doubled and then it fell in half. It would have looked real terrible. But when you understand what happened with that data, you'd be like, okay, well, these ones are really cheap. Like those things there, we bought them so cheap. If you went back to revalue them straight away, and back in the day, let's buy some properties and stuff for people really early days in the business. If you would have gone back straight away and revalued that property, you would have done yourself a disservice, because the comparable property, even though if you were to stick it back on the market and sell it for 100 grand more, like seriously 140 grand for a 1-bedroom brand new unit in the Central Coast, if you were to stick it on the market at 250 at that point, it would have sold. But if you go to revalue it, the bank would only have the data from that report for that. So it can work in your favor, it can work against your favor. But
I think, that's super important as well, I think, from managing people's expectations with the whole valuation thing, the whole, harvesting of equity. How soon after a settlement should I be doing that? And I suppose it depends on the market and the
rebate.
Yeah.
That's your next question.
Oh, is it?
Literally. But just on the last thing, right? Just on the last one. People, when they look at a property, they go, I want it to be a house, I want it to be subdividable, I want it to be dual income or potential, I don't want to pay strata fees. If you're buying a house or you're buying a townhouse, if you buy a house, there's something you never put in here. If you're buying a house, okay, you don't have to pay strata fees, right? This thing here, townhouse, you'd be looking at strata fees, I don't know, $4 grand a year, right? Yeah, I'll buy a house next door. These things when we're buying them at 250, the houses were selling for 500, right? Now the houses are selling for 800, but these are selling for 500, right? So this thing doubled, but the houses didn't double, right? Even though it's a hot market. So the cap is there. But you could have owned 3 of these things rather than 1 house, right? You've got 3 rents, which would have gone up $100 each one in the last year. So you'd have $300 a week positive cash flow today. The house would just be breaking even at a neutral cash flow. However, when looking at the strata fees, if you're going to pay $4 grand for strata fees, when you buy that house which has bad cash flow, all that sort of stuff, you've got to now pay building insurance, right? So you're probably paying $1,500, $2 grand a year for that. You're going to have to paint the outside of the building. You're going to have to repair your driveway, right? But because this is a part of the complex, there's pros and cons to all that sort of stuff. So I don't look at when I'm doing a deal, is it this, is it that? My emotions mean fuck all, right? And it's something we're going to talk about a little bit later, is people's emotions in deals. My emotions and thoughts and all that doesn't mean shit. When I look at that deal, if I'm making 50 grand on it, I want the 50 grand. I don't care if I'm getting 50 grand in 10-cent pieces, $2 coins, $100 green bills, however it comes, I want that. And that's the result people need to be looking at. On that note, over to you, Pat. You got refinance slide.
Yeah, no, and often a question that I get is, or maybe more, not so much a question, but more of a scenario that I get is, someone will settle a property. Let's take the 200,000 example again, and they want to do a refi. They're excited to go in and get the equity.
Yeah.
Right? But that's an element of what we do that is somewhat unknown. It's not guaranteed in terms of the equity. We can put ourselves in the best position with all of the data and all of the analytics and all of the knowledge that we have to make it more probable, but it can't be guaranteed because it is up to the banks. Different people will service with different banks that give different valuations, all that kind of stuff. So sometimes a disappointing element of what we do is when you do a refi and the equity's not there.
Yeah.
Now, everyone's heard it all the time. Property is a long game. Yes, that's true. But we're not talking wait 5 years and then do another refi. We might be saying wait 5 months.
Yeah.
And do another refi.
I've always said to people, wait 6 to 12 months.
Yes.
Right?
Yeah.
Generally 12 months, because you need the property to settle, you need to go to land titles, it needs to be registered. Then, when you put that property in, that now becomes a comparable sale for valuers and whatnot to compare it to. But we're picking it up, and then next month there comes another sale, the month after there's another sale, and the bank goes, okay, well, there isn't. It's not because the market's crashing that you got this one cheap. It's not because something's out of line. Everything else is selling. And it's like, okay, everything else is sold for this. We can give you the valuation. So I normally say 6 to 4 months. But we have had people in 2 weeks get the equity out. Literally 3 days, right? Go get the equity out. That is rare. We will try from the day that you settle. I literally, when everyone gets their congratulations email, hey, congratulations, your property settled, give us a review, give us a thumbs up. I get CC'd on that. And then I'm like, okay, hang on a second. Is this one? I'll normally send an email to saying, cool, like, is there anything I can help with, whatever. But then also look at, okay, what's this investor's position at?